What's good, YouTube? I am back with another video, y'all. And look, in today's video, well, first, man, I just want to say thank y'all to every single person that subscribed to the channel, man. We just hit 50 subscribers, on the road to 100K. 100K is crazy. On the road to 100 subscribers. You know what I'm saying? That's up next, y'all. Main channel, DHS channel, recently just hit 20K. You know what I'm saying? Currently uploading the video right now. However, like I was saying, Digital Hustlers has recently just hit 20,000 subscribers, man. 20,000 subscribers, which is crazy. Over 1 million views. You know what I'm saying? We started last year. And what, 3 months now, 4 months. But, however, we finna get into this video, y'all, and I'm gonna talk to y'all about risk management. Alright, risk management and risk to reward. Now, we finna come over here and we finna do this. Alright, so risk management slash risk to reward. Man, it's hot in here. Alright, so yeah. Risk management slash risk to reward. Alright. So, y'all know me. I don't really like to go based off what everyone else's say. I like to just state what these words mean to me. So, what risk management and risk to reward mean is how much are you willing to invest in this position, right? This is what risk to reward is for me. And risk management is, let me put risk management second instead of being third. All right, so risk management is how many trades, L typing, how many trades can you take before blowing your account? All right. So like I say in every one of my videos, all these videos that I post and I drop are for y'all, of course, but they're also back to me. I watch a lot of my own videos. If y'all watch my last video, I stated this. And I also stated how I lost $500 within 1 week of trading. $500 within 1 week of trading. But as y'all can see me, like I'm not really affected by it. Like, I'm not fearful. I'm not scared of losing all my money. I'm not as aggravated as I used to be. Like back then, boy, I would blow a $200 account and I'll have the worst week. Like I have the worst week ever. So me losing like 500 in a week, that's literally one of my paychecks at work. But the way I trade now, it's like I can make all that money back within 2-3 trades. You know what I'm saying? So it really doesn't faze me for real. It's just like, okay, you know, it is what it is. Like, and also my psychology has been changing a lot lately, and me realizing that, you know, I'm taking a risk that I do every single day, going out buying food, buying drinks, as in, you know, smoothies, because I don't drink sodas. I don't drink liquor like that. Like, it's not something that, you know what I'm saying? So it's like going out and spending all this money on clothes, shoes, you know, food, drinks, etc. It's like all that I'm risking, all of that money I'm giving up, and I'm getting nothing in return. So me going into the market is like, okay, I'm putting this money up, but I'm possibly able to make this money back. You know what I'm saying? So instead of me spending the money unnecessarily, not getting nothing back from it, I'll at least attempt to make something back from it within the market. So that's how I look at, you know, that's how I look at trading. You know what I'm saying? That's how I look at trading. I am an individual that used to blow a lot of money in shoes. Like every single week, my paycheck from Waterbreaker would go straight to shoes. So I was just going like $200, $300 into shoes, and I wasn't getting nothing back from it but a piece of piece of clothing. You know what I'm saying? Like, yeah, shoes are important, but at the time, I didn't need those shoes. Like, I didn't need $600 shoes. I didn't need Alexander McQueen's that cost over $500. You know what I'm saying? But back to the video and what we're talking about. I just wanted to give that example. How many trades can you take before blowing your account? Now, look, y'all, I have blown over 30 accounts in my trading career. No bullshit. I probably double that. Honestly, I ain't gonna lie. Like, I've done blown a lot of accounts, y'all. Like, I always told y'all my money to management is not the best. I done blown so many accounts. I'm talking about blowing like 3 accounts in 1 week. Now, if you're a trader, that's crazy. I ain't gonna lie, that's insane, but it has happened. Literally blowing a prop firm account within the first hour that I got the prop firm account. Like, I'm so serious, bro. It's bad, but yeah, how many trades can you take before blowing your account? So look, y'all. One thing that I did learn, if y'all go over here, I'm gonna put y'all on this book, man. Trading in the Zone by Mark Douglas, man. This book right here, I done read this book around 3 to 4 times already. I usually go to this one right here, or this one. No, yeah, this one. It's another one. I don't want you to go to one of these videos and it talks about a lot of nothing. So yeah, just go to this one. This one right here, the 7 hour one. But I done literally listened to the audio of that book around 3 to 4 times now, and then every single time I read it, it's just like boom, new things hit, new things hit, new things hit. So it's like, it's crazy to me how the first 2 to 3 times it's like I listened to the same audio, but I didn't catch it the first time. So you got to keep going back. I'm actually going to listen to it over the weekend because what happened last week is, yeah, we ain't gonna talk about it. But yeah, how many trades are you how many trades can you take before blowing your account? So one thing that Market Douglas said is that you should have a 20 trade sample size because trading is like flipping a coin. All right. I don't have a coin with me right now, but I do have this iPhone case. All right. So if I throw this iPhone case if I throw this iPhone case in the air and I let it drop, the iPhone case can only do two things. It can only land on the front side, which is this side, or it can land on the back side. It can't land like this. It cannot land like this. It cannot land like this. It cannot land like this. It has to be like this or like this, right? And that's how I started to look at trading. It can only go up or it can go down. It can consolidate, right? Sometimes if I throw the phone up, it might start moving around like this for a little bit, but it will always end up like this or like this. So with that being said, when Mark Douglas said that, and I started to realize, no, for real, like trading can only go up or down. So you can be completely wrong. I can be like, oh, this is gonna fall on this back, and then it lands like this. I can be like, oh, this is gonna land on this front, and it can land like this. You know what I'm saying? Yeah, I lost my train of thought with that one. But I can never really tell what was really going to happen. I can just take the market structure for what it is and just flow with the momentum. So I can't really, there's not really many variables that can tell me this is going to land like this or this is going to land like this, right? Same thing with flipping a coin. There's not a lot of variables of landing like this or landing like this. It's more so just luck. So with that being said, if you start looking at it in a more probabilistic mindset, let's say for example, I take 10 times that I throw this in the air and I let it drop, right? And I say 5 times out of those 10 is gonna land like this. The same way that I just said 5 times it can land like this, it can land like this 5 times as well. Because it's a 50-50 chance. I just have to be able to take what's going on with the phone case and just take it for what it is. Same thing with trading. Take it for what it is and what is being shown. Only that the difference between trading and flipping a coin and flipping this phone case, that there's actually variables in the market that can tell me, oh, this might go up or this might go down. All right. So with that being said, Mark Douglas said a trading, 20 trading sample, right? 20 trade sample that you can go into the market with. So with this being said, what he means is that you can take 20 trades before losing the whole account. Ever since I learned this, I learned this. I probably read this book about, like I said, 3 to 4 times. The first time I ever read it was like a year ago, a year and some change ago. But like I said, after some time with me actually listening, it's like you start to gain more knowledge. And I didn't have good risk management or risk to reward back then, and that's why I blew so many accounts. But since I've learned this, I only done blown like probably like 5 accounts since I learned this, and the 5 accounts came from mostly just prop firm accounts, and you have a day limit. You have a limit on how many days you can take the trades and stuff like that. So that's pretty much how why I blew those accounts. But as in my account going from $500 to zero, or $500 to 200, or $1,000 to 20, not 20, $200. It hasn't. That has happened a lot because, like I said, my risk management's always been being developed and stuff like that. So really, this last couple months is the longest I ever held the account for. You know what I'm saying? So with that being said, instead of doing 20 trades, I do 30, just because I know myself. I'm very curious. I'm a very observant individual. You know what I'm saying? Like sometimes I might just look at something and be like, I wonder what this will happen. And instead of me just watching the trade, I'll just get in it. You know what I'm saying? I'll just risk the full amount, risk $30, risk $50, and be like, you know what? Let's see what happens. You know what I'm saying? And I have that bad. So with that being said, I do 30 trade samples. And with that, for example, let's say right now my account has $1,000. What you will do with this is you'll do 1,000 divided by 30, and that would be $33. So I'll be risking. How much are you willing to invest in this position? It'll be $33. All right. Now the reward part is how much money you will make from the trade. So we take 33. Like I said, I trade 1 to 7s. I'll always suggest y'all to go either 1 to 4 or above. What that means is that you're quadrupling your money for every single trade that you get in, or every single position that you make. So let's say you're risking $25. You either lose that $25 or you make $100 back in profit. So let's say you hit three trades, right? You turn that $75. You turn that $25 into $100. You do that 3 times. That's $300, right? Let's say you lose 6 trades, right? You take that $25. You multiply that by 6. That is, I believe, 125. If I'm not mistaken. No, I lied. That's 150. Yeah, 150. 25 times 6. That is 150. So 150. You minus that by the 300 that you already made, right? Realize that you hit 3 trades and you lost 6, and you still up $150. That's just the power of risk to reward, right? So like I said, I do 1 to 7s though. I don't do 1 to 4s. So 1 to 7s. Yeah. So 33 times 7. That would be $231 that I would make back. So I would be risking $33 to make $331. All right. This basically what risk management and risk to reward can do for you. It can lessen how many accounts you've blown. It can help your trading psychology, because instead of, let's say for example, right, instead of doing 30 trades, I did 15 or 10 trades. So instead of risking $1,000 now, I'm risking $100 per trade. That means I only have 10 trades to lose. My account would have been gone. This week, y'all, I took more than like 12 trades and I lost majority of them. Well, damn near all of them. I ain't gonna lie. I lost all of them. I just didn't get into this one right here. This would have been the winner. This would have been the winner right here, right? This 1 to 7 right here. So I would have made back majority of that money. But like I was saying, if I would have had a 1 to 2, a 1 to 3, a 1 to 4 risk to reward ratio, well, not even. If I was to take that same sample size of 30 trades and put it to 10, I would have lost my account this week, because I lost more than 10 trades. But since I have 30 trades, that means that next week and the week after that, I still have an opportunity to make all that money back and then keep growing and keep excelling. You know what I'm saying? So I always take a risk management and risk to reward to account. Like I said, back to the example that I was just talking about. Let's say I risk $25 per every trade, and and I make $100 for every one that I hit, because I traded 1 to 4, right? So let's do that times 3. I hit, like I said, I hit 3 trades. That'll be $300, right? Then we take the same $25 that I just risked it, and then next week we trade another 6 trades, but we lose all of them. Now I'm up $300 in the first week. Second week I lost $150, right? So now you do 300 for the first week minus the 150 that you lost in the second week. You're still up $150 for that month. You know what I'm saying? So that's why I don't really like trip on losing on trading no more. I just take the risk management and risk to reward, and I just focus on probability, not being too attached to the money. You know what I'm saying? Because even with these trades right here, I could have got out these trades. I could have took this 58 pips that I made on Euro CHF. I could have took these 85 pips that I would have hit on NZD CAD. I was up 85 pips on this trade. I was up 50, 59 pips on this trade. This trade didn't activate until it hit stop loss. You know, it activated, didn't hit stop loss. I didn't take this trade because I was fearful of losing both trades, the Euro CAD that was for a buy and then the Euro CHF that was for a sell, because it's kind of contradicting itself. Like I said, I would have made all the money back within this trade right here, but since I didn't put it in, since I didn't keep the probabilistic mindset with trading, I lost the trade. Now, you know, for next time, I know to put two trades in, regardless if I lose both, just put them in, because one might hit, and that one that hit might wipe out the one that I just lost and the six other trades that I probably lost, or the six other trades that I haven't got into, and now I'm up in profit even more. You know what I'm saying? So it's all about just mindset. And another thing, right? I could have took these 50 pips that I made on GBP cap, but I didn't. Why? Because I trade probabilistic trades now. I don't get attached to the money. Even though I was up like $70 on this trade, I was up over 300 on this one. You know what I'm saying? This was my entry right here, and then it shot down. I still didn't get out the trade. Probability. But yeah, man, that's gonna be the end of this video. Don't want to make this too long. Hopefully y'all hey man, pay attention to this video. I promise you, this is a gem right here. Like, it's gonna stop you from blowing so many accounts. I done blown so many accounts within my 3 years of trading. So many accounts. It's not even funny, bro. But yeah, man, y'all traders, man, y'all keep protecting these markets. Everybody else, y'all stay safe out here. DHS is out. Road to 100 subscribers. We out.